Hello, everybody. I want to welcome you back to the Dynamic Decisions podcast, where we explore the strategies that drive successful decision making in the world of business. Why? Because the best decisions come from great conversations. I'm your host, Tisha Cable, CEO of C Model Data, and today we have an exceptional guest who is a leader in operations and scaling. His name is Stan. He's the Chief Operating Officer at MasterBorn. And with a remarkable background in software development and extensive experience in scaling operations, Stan has been instrumental in driving growth and success for some of the industry's most notable brands. Stan, welcome to the show. Thank you so much for being here. I'm super thrilled to have you. Could you start by telling us a little bit more about you, a little bit more about MasterBorn, talk about the innovative work that you're doing there?
Pleasure to be here. Thanks, Yasha, for the intro. So at MasterBorn, we're a product development agency and software house. And basically the thing we're doing is we support companies end to end in their journeys to productize what they want to productize. And it's a journey that started over 6 years ago. Basically, our two co-founders were guys that were doing their own products. And they were looking for talent. They were looking for speed of execution. And they basically found Poland and they figured, hey, there's a lot of talent here. There's a lot of people that are fantastically capable. And it seemed to be still somewhat untapped for various reasons. So they had their previous company here. And after that company they successfully exited. A bunch of people in the US started reaching out to Gray, our CEO, saying, hey, Gray, I have this idea and I have a lot of capital and I would love to do a digital product. Maybe you could be my co-founder or my partner. And he was getting so many of those that he said, well, maybe instead of being a partner in all of these ideas, we can do a service out of it. And the kind of the magic thing was that, Polish talent is extremely well renowned for digital stuff. If you just Google all the hackathons, all the competition, there's always this Polish guy somewhere in the top, or this Polish team somewhere in the top. There was a hackathon, I think, by Google, where there was 8 Japanese guys, somebody from summer, and then the second place was an AI, and the winner was a Polish guy. So
wow.
it's like all the guys that beat the AI in actually optimizing the algorithm. It is extremely consistent. What maybe aren't that great in Poland is we don't have commonly, we're a bit more deliberative, I guess. And if you're used to this fast-paced American-style entrepreneurial kind of mindset, you can sometimes hit this wall of, these guys don't get me. So what we very kind of purposely were pushing on is saying we are very much selecting people for this entrepreneurial mindset, for this kind of MVP thinking, fail fast, better done than perfect, et cetera, for this can-do attitude. And the value prop is supposed to be you're talking with somebody in Poland, but in principle, it could be your next door neighbor with this kind of American flair and American way of communication, which was what we do. I actually joined MasterBorn just 2 years ago, at the stage where MasterBorn was growing very rapidly. And actually my first conversation with one of the co-founders, Radek, was like a very non-commitmental conversation. We were just discussing some challenges they're going through. He had 1 million things they could be doing differently. And, and I was very strongly pushing them on what is really the challenge we're trying to solve for? And what was funny was that both Gray and Radek had slightly different perspectives, but what I very strongly felt is that it's coming from the same place. It's coming from the place that they grew so much that it's now they were used to working with 30, 40 people. Now they were at 60, 70. And that's but this kind of cultural cohesion, you start losing it because you don't have the coffee chats anymore that make everybody get you. And now you're bigger. The coffee chat is enough. And it's a lot about scaling alignment. So with my background, I spent 10 years in McKinsey before. And I started my first 5 years was as an operations consultant and scaling operations. And then my second half was around agility and product development. And I always felt that I loved McKinsey. It's a fantastic learning journey. It's tough. They grind you hard, but you have fantastic business judgment. But what really always frustrated me was that it seemed there's a lot of this really easy, quote unquote, easy. There's nothing magical in what McKinsey is doing, but it's very difficult if you're a smaller company, to get the benefit of that because it's just super expensive.
Yes.
And getting those people with that judgment is difficult. So it was always kind of a bit of my personal mission to take that know-how to companies of 100 people size. And we had that conversation. It was just a non-commitmental, but they proposed me a role to kind of support them in growing a certain team. And a year later, I became the COO. But it was always my kind of thing that I felt we need to scaling. Like an easier way of helping people scale. And that's also outside of MasterBorn. I'm doing my mentoring for people that do mentor for people that are at this stage. It's called 30 to 3,000, where you're like, I have beyond the 30 people and you want to get to 3,000 people. That's my mentoring. And very recently, we started kind of productizing it within MasterBorn. We created something called Org Scale, which is basically and kind of an AI advisor where you can just like chat with an AI advisor and they can help you identifying those gaps and needs in scaling. So yeah, that's kind of my story of the last 12 years in a nutshell.
I think it's fantastic. I think that this concept of like scaling alignment, scaling, the 30 to 3,000, I think are absolutely where the holes and gaps are for people, especially when you find some element of success. How do I take that and 10x it, but how do I not lose the thing that made me find the thing that was special? So I absolutely understand. So keeping that in mind, what do you believe are the most critical things for a software development firm to really succeed in doing this when the landscape is super competitive? There are a lot of software development firms out here today. And then we've got the onset of AI, which, as you even noted, was second in your in the experience you just had, second in the contest you were in. It's good stuff, the development stuff that's coming out. So tell me a little bit more about what you think there.
Absolutely. And I think this is even more broader because we traditionally used to between these service technology companies and the more product oriented ones. And that was how we historically were always thinking about it. And that was coming from this idea that product companies have a moat. They have something that defends them from competitors. With AI, it seems to me that, maybe 40, 50, 60, 70% of those companies, that moat will stop existing because while everybody wanted to have a differentiator that is truly them, for a lot of companies, it really was the fact that they were just first, that they invested first, and then now they just need to do marketing and somebody else has to develop it and do marketing. So that was the moat. With AI rapidly speeding up development, and to be honest, and to be clear, I'm not I think the hype is too big. I don't think developers are going away anytime soon.
Sure.
I think it's going to be another tool for developers to thrive and increase productivity.
And go faster.
It will make it easier. It will make it faster to develop things. So the things I will be saying right now, I think will be both true for software houses, but also for traditional product companies that will become more servicey, quote unquote. So what I really believe is when you get that a bit better, that success, there are kind of three phases you really need to go through. One is what I call do no harm phase, which is basically just making sure that whatever was working, you don't break it, because people panic and they do nervous moves. There's a lot of, for example, founders regret on getting the star hire that's going to fix everything now. That is very rarely a thing that's easy to do. Like, there is no magical operator, general manager you can now hire to fix that. So first of all, do no harm. Just make sure the clients you have are happy. You can, of course, decide which ones are perspective, and maybe some of them are pulling you down. Sometimes early stage clients, some of those, maybe you tailored a bit too much for them. Maybe they are actually draining your resources too big. But in principle, identify the ones that are your lifeline and the blood of your company. So don't break that. Similarly, your top talent, identify your top talent, have honest conversation with them and tell them, we want to build a future here with you. That you are the ones that we want to do because we believe it's you. And so that's financials, that is sales, and thirdly, finance. That is also something companies that scale. When you start a company, you have an accountant, and their aim is not to get you in prison because you failed to submit taxes or whatever. Over time, then you try to optimize the taxes a bit, so you get their advice, like, what can I do smarter? There is a moment where you need actual insight, and very rarely that first accountant is the person that can help figuring that inside out, right? So you're figuring out like a fractional CFO or somebody that can help you. That is all really difficult stuff. So I typically say start with do no harm. So do that sales hygiene, do that finance hygiene, put aside a buffer. If you're having revenues, make sure if there's a collapse, can you survive 3 to 6 months in a collapse because you will make mistakes. So do finance hygiene and then the people hygiene, identify your top talent with that lens in your mind that the top talent that might have been the top talent the first year might not be your fifth year top talent. It's what got you here won't got you there. Anybody that doesn't know the book strongly, it's one of my favorites. So
okay, this is good. This is really good. Do no harm. That's the one at the tip top. And doing no harm means I got the right talent for right now. And then I know my numbers. I'm not out here without knowing where I stand financially.
Exactly. Right? And that's
Absolutely.
kind of stage one. And then stage two is realigning on the why. Because that coffee machine syndrome I mentioned, that before you didn't have to do it. Like you spoke in the same room, you went for lunch and you had those conversations. You didn't even, quite often, you didn't have to really explicitly even say it to yourself. You felt it, so you never had to explicitly say it. And now you're at a stage where you have to confront yourself with that. Can I put it in words? Can I put it in numbers? Like, what is the problem we're solving? How are we different? And how are we making sure that people know these two things? Right? And that is a conscious effort that very rarely, like early stage founders that are like at this 30, 20, 30s, they didn't have to do it. They have pitch decks for investors, but that's a slightly different thing. There's a different story you tell investors versus the thing you tell your team. It's slightly different framing. It's the effort you need to go through. And only then, after you do that, that's stage 3, you kind of grow on the 3 things I mentioned. Like, so on the things I said in do no harm, when you do the do no harm for sales, finance, and people, now you take that why and you double down on those 3 things based on this re-established why. So in people, think about who are your leaders. Maybe you didn't have a leader structure before. At 60, 70 people, you need to have a few leaders. So define the autonomy, I call it the autonomy box. So like define what is in the autonomy. You never had to do it before because they got you. When you scale, you will be frustrated with people not getting you. And you will be like, I need to fire them and hire. That might be a huge mistake. It's maybe you never told them what is the range of their autonomy that they should work in, right? So revisit your people processes, think about consciously recruiting, perform all that stuff, all that corporate quote unquote stuff that people really don't like that much. And of course, I'm not saying do bureaucracy. You can do it in a lean and nimble way, but do it consciously, like have somebody to sit down, think it through and be able to communicate it. Same story with sales. Start thinking structurally about sales. Play the long game, play the numbers game, have a process, all those yucky things that people don't like in the beginning. Just start doing them. And again, going from that why, when you force yourself to say, what is the problem we're solving for clients or how are we different? That will enable sales like hell because salespeople have a difficulty in selling what you do if you don't know. And thirdly, finance. Once you have that buffer on the side, your cash flows, your margin disappearing roughly. Okay. So now you know your why, you know your people, build a KPI tree to match your governance. So what is the main KPI? It can be simple. You're optimizing for margin or for volume. What are you optimizing for? Where does margin come? Okay, margin is revenues and costs. Okay, for me in a software house, so revenues is the amount of hours or people I sell and the rate, and the cost is dependent. Just do that and then make sure that that autonomy box you defined with your people is aligned with that. So you have an autonomy about this part, because that will allow you to push it forward and then see. This is actually when we gave the people the why, we defined the autonomy box. The top is the why. The bottom are these numerical constraints. You gave them the box in which they have autonomy. Every once in a while, we need to sit down and have that honest conversation. Are we delivering on the metrics now? Are we doing that? And that is the moment where if somebody really wants to say, these are not the right people, sure, that is the time, not earlier. Otherwise, you're going to burn your great talent. And the new ones, they might hate you in 3 weeks because you aren't going to be able to enable them in doing that. Right? So again,
what's the metric? So just only because you were on this topic of the things that you're measuring. So you've got a secret metric. You've got this metric that you look at. What is that one? The one that everyone's why, Stan? Why are we tracking this? Why is this so important to you? And maybe everyone doesn't understand your why on that particular metric, but it's something you need to know this all the time. What metric is that? Or is there one?
Yeah. For service companies and MasterBorn, so there are 2 metrics that I think are absolutely crucial. There's typically a metric that is just universal. And that universal metric for any service company will always be utilization. You need to be utilizing your people. You need to make sure that basically that the salaries you're paying out are converting into business and not people sitting on the bench and waiting for a job. And that is just a classical thing for any service company. There's no magic dust sheet. For MasterBorn, the second metric that we are really, really focusing on is always a pivot metric. So we typically have a structure of figuring out a short to midterm goals. And we have a quarterly business review where we figure out like, where are we going? And we always define a pivot metric. And for example, right now, our pivot metric is what is the fraction of our total client base that we define as quote unquote well-funded. And that is just something that we have discovered that brings us fantastic opportunities, because we are really good in helping to scale, while we can also did a lot of work with startups. And that is super rewarding. That's like, people love doing that. It's exciting. It's uncharted territories. It's really fantastic. So we still do that because it's just passion. We're just very passionate about it. I do believe that the multiplier is really when you're getting to a bit of more scale, right? So now our pivot metric is what is the fraction of our total client base that is this well-funded versus startup, and we want it to grow, right? Because that is where we believe this fundamental scaling at scale multiplier kicks in, and that is where there's just a massive multiplier on what we do. Again, some of the people in MasterBorn are probably just shedding a tear right now because everybody loves startups. We really love them, and we're still going to be doing them. But I feel the future of where we can be distinctive is this scaling at scale.
Hey, this message right here is for our audience. I want you to think about your own experiences with scaling operations. Are there decisions that you've made that have significantly impacted your growth trajectory? Share your thoughts with us on LinkedIn and other social media using Dynamic Decisions Podcast. Okay, Stan, I want to go further. Let's dig into leadership a little bit here. So you're the chief operating officer. Are there any particular strategies that you use to build up the culture of innovation, but not just innovating without the concern for continuous improvement? I want to innovate not just because we can, so no AI for AI's sake, but for real purpose and making something better. How do you build that up? Are there strategies specifically that you use?
Absolutely. I think the old adage of culture eating strategy for breakfast holds true. While strategy is important, it's good to have it explicitly put down, etc. If you have a great culture, then you can inspire people to help you shape the strategy. If you have a great strategy and a crappy culture, then probably you're in trouble, because you're not going to have anybody empowered and capable enough to deliver it. So this culture, for me, has kind of two aspects. One is this thing I just mentioned. So this very strong why, then the autonomy box, as we call it. So from the top, why, then the autonomy for leaders, and then kind of the constraint of just numericals of both economics and health, because that's kind of how we frame the autonomy box. We say like you are constrained with the health of your team and with the economics of your team, and both are equally important, because you can optimize the heck out of economics and then everybody's going to leave in 6 months. So please don't do that. So that is kind of one kind of mental model we're using for that. The second thing that I absolutely love, and I learned in McKinsey, that saying that once you have a hammer, everything looks like a nail. This is my hammer. This is something that I really, really love. It's called the influence model. And whenever we make a big decision be it in our QBRs or, what is our next pivot metric, we say, what should we now structurally do to make this happen? And the influence model is this fantastic tool that is composed of these four items. One is my favorite, start with why. So just a compelling change story. If we are now to do something differently, for example, one of our things right now is figuring out where is the ROI for AI. Because as you said, everybody's doing AI. We don't want to do hype for hype. We want to make sure it makes sense. And you can clearly it makes sense, but now there's time for a bit more structured thinking. So very strong why. Then secondly, role modeling. That is why I mentioned when I go through those 3 stages of do no harm, realign on the why, and then deep dive into what you did no harm on. That is in the people I said you need to have those leaders and the performance evaluates management, etc., etc. And that's because you need people to be closer to the people to do the role modeling. There's loads of research, and it's this very nice question. They ask people, I would change my mindset and behavior if, and the 4 answers, telling change story. So I would understand the why. The second is I would see my peers and leaders behave the same way. So role modeling. The third was I will know how. I will be taught both informal and informal setting how to do it. And fourthly, there will be formal mechanisms that will reinforce that, be it through performance evaluation. I will be basically rewarded for doing it and maybe disincentivized to not doing it. And once you have those 4 things, change management is difficult. When you're doing something new, like we resist change. That's natural because just the status quo is comfortable. Doing these four things in a systematic way changes the probability of success in change management progress from like 30 to 60, 70%. It's a dramatic change because well over 70% of change programs fail. Very bad in doing change. When you do four things, they just click. So that's what we're doing for right now with AI. We're figuring it like, so we did a very strong why. Want to make it. We don't want to do the ROI. We don't want to just do it because there's hype. We workshops with our leaders. We want them to be all role models of AI, and we want them to show everybody this is the future. We are doing all sorts of formal and informal kind of trainings on it, and with a strong emphasis on informal. I mean, adult learning, we're garbage in classroom training. I mean, human beings, even kids are not that. I mean, kids more flexible brains, but adults are terrible at that. So job mentoring very strongly, and then formal, like all of our, we have so-called growth models, which is how we do our performance review. Everything is now like checking that project of figuring where the ROI is. There's going to be a sentence: we have found ROI in this and this is now part of your performance evaluation. You like, because we found ROI in it, and those is.
You're speaking my language right now. You're really speaking my language at a level that I don't even think you understand. I'm sitting here so quiet because I'm like, yes, this is exactly it. Even the concept of the way you talk about the why, this in the influence model, particularly this compelling change story, is very similar how I think about vision being the most important thing when you're trying to bring the team along into new places. How do you cast a vision and lay it out in a way where you can ensure that they get buy-in? So I think I have a model that's very similar to what you're describing. So I guess I'm just saying I agree. I agree with everything you've said. Hey, so Stan, we're going to move into my favorite segment. It's the last segment of the podcast, but I love it. And so what we do is I'm going to actually explore your decision-making persona through this assessment of different decision-making styles. So I'm going to ask you 4 different questions. Each one of them represents a different approach to deciding. And after each one, you're going to tell me how the way that I'm asking the question actually resonates with you. And you'll have a percentage from 0 to 100%, but you only get 100% total, okay, across all 4 questions. And because people ask all the time, I'll tell you, no, I can't give you the next one first. You have to answer your question and then go. Okay.
So I need to kind of retain the remainder of the 100% for later questions. That's what you're saying.
Yeah, you might need to do that. So you really got to think about your percentages because you only get 100% and you're going to get one at a time.
So, okay. So if I just say 100%, then I'm screwed. Pardon my French.
You're done. Right. You're done. So and it won't make sense. You won't understand. And a push comes to shove, I always let people recalibrate later after each one of them if they need to. Okay. So it's kind of flexible and fun. All right, here we go. The first one is called the feeler. It's a values driven leader. This persona prioritizes alignment with core values and mission, often weighing the human impact and cultural fit of decisions alongside business metrics. So here's the question. When considering a new operational strategy, I ask myself, does this align with MasterBorn's core values and client goals? Even if a more profitable operational change might generate short-term results, I need to feel confident that we're building lasting relationships and positive impact that reflects our company's mission and values. How much do you resonate with that style?
I would say 30%.
30% feeler. You want to give us a little why?
In principle, I fundamentally believe that is why you have your values and your vision to sometimes make tough decisions that are painful. And there's nothing more painful than saying no to money. So that is exactly what it's for. And I try consciously pushing myself. That is difficult. It is difficult. It's painful. So I would like to, at first I wanted to say 25% because I thought I think that's like a quarter. But then I said, I need to overemphasize it a bit because of the fact that it's difficult. I'm always annoyed with myself. I'm never happy with my answer, but I think that is a good sign in a sense. That is a sign 100%. That things are being considered.
Absolutely. So that's great. That's a great response, and an honest response. And I think that when it comes to people trying to line up their values to the things that they're doing, I also believe it's critically important, but when you're in business. So You have things to think about. Okay, here's your planner. Are you ready? This one is called the strategic visionary. So this persona focuses on the long-term implications and future-proofing decisions, always thinking several moves ahead and considering multiple scenarios. So when making strategic decisions about operational initiatives, I ask myself, what are the long-term implications of this choice for our growth trajectory, team capabilities, and market positioning over the next 3 to 5 years? I need to map out how industry trends, client expectations, and technological changes will impact our operations and ensure our strategies remain robust and adaptable. Where do you stand?
It's probably a 40. That is probably a 40%. There are a lot of people around the world that used to joke about me that I argue in frameworks. I'm the annoying guy that always has an issue tree. The amount of issue trees I have written down on whiteboards in my career is probably among the top percent of people in business, because I just really like doing trees and issues and like what is our 60% probability, what is our 20%, and assigning probabilities, and then equivalent to that, putting in problem solving effort behind the branches. So that's definitely 40%.
You better talk that talk, Stan. Yes. First of all, I'm loving that. I love the statement you just made. So it's not only are you building out the probabilities, but I'm putting the problem solving behind the branches. Like that is, if I could sit all day and just sort of look at problems and identify ways to solve them and which of these is going to be the better of the ways to solve them because they have the highest chance of actually reaching the outcome. Oh, my goodness. So I love that. So that's a great way to think about how that matter of fact, I think the reason why I'm so excited is because that was just a great way to think about the answer to that question. So, kudos to you. Okay, so the next one is called the counter. It's the challenger of assumptions. So this persona naturally questions conventional wisdom and looks for contrarian opportunities, often finding success by zigging when others zag. So when evaluating operational changes and growth strategies, I ask myself, what assumptions are we making about how software development firms should scale that might be fundamentally flawed? What are others doing that we should question? I tend to dig into why certain operational approaches work and whether there's a more innovative method leveraging our unique strengths to solve problems differently. Where do you stand?
I'm going to put this one, and this might be weird, but I'm going to put this one at 15% just because I feel so while of course, clearly, and of course, there is a massive ROI in figuring out the right zig whenever there's zagging. Absolutely. At the same time, I think that especially recently, if you go through LinkedIn posts and everything, there's too much glamour being put on figuring out things differently, and there's massive survivorship bias behind them because somebody experimented with something weird and it worked for them, but it didn't work for another 1,000. And I'm like, do the basics first. That's why my 3 steps start with do no harm. Do the basics first. Have a stable, do that buffer, do all of that, because it's very easy to do a zag and then crash in the wall. So yeah, it's great. You need to have that component. You need to challenge assumptions. And, that's why, when I do my issue trees, that's part of the issue tree, noting them down so somebody can look at them and say, oh, this is nonsense. This is a wrong assumption. So we absolutely do that. But I do think, especially probably, and it might be also the reason in the scale, the scaling thing is really doing a lot of the basics well and empowering some people doing innovation, some people figuring out that they need to have a very strong basis.
Scaling at its core is what's repeatable. So at some point, you got to be able to do it over and over and over again. And so at that point, now you're doing it and it's basic, even if it started off as something innovative. So
exactly. For those that already have product market fit, that is probably time to say, okay, continue innovation, continue asking clients, continue figuring that out, but figure out repeatability.
Now, the other thing about this role that's so interesting to me, and this is probably the case for you, is there's always someone on your team. So when we think about these decision-making personas, a lot of times your team will include someone who thinks like that. It's not necessarily that you have to, but someone in the scope of the leadership, someone has those thoughts, so you have them covered. We don't all have to carry that at high percentages, right? All right, here's the last one. Are you ready? It's called the data driver. It's an evidence-based decision maker. So this persona relies heavily on metrics, analytics, and concrete evidence to validate decisions, preferring proof over intuition. So before making important decisions about operational strategies and resource allocation, I ask myself, what does our performance data tell us about project success rates, team efficiency, and client satisfaction? I want to see concrete analytics on delivery metrics, quality indicators, and growth patterns to validate our strategic direction. Where do you stand? You only got 15%, by the way.
Yeah, I know. But I'm kind of thinking right now, that is a number one, but I'm kind of almost happy to say fine with 15 because again, so while data driven is super important, right? And this strategic part that we had in the number 2, right? This issue tree, there's always number at the end of the branches. Each leaf of the tree has a number against it, right? So I absolutely believe it's important. At the same time, I think it is so when, for example, when you scale what I said about accounting, right? You had an accountant, now you move to controlling, and you have like somebody. They're like, people obsess about early close, right? Close your books faster so you have good numbers. I really think that is fundamentally the wrong question being asked, because closing the books is in the past. What you should be doing is figuring out these 1, 2, 3, 4 relative closer to easy. Nothing's easy, but closer to easy, forecasted, actionable items, right? So don't flood yourself with data. Figure out the 3, 4 that are actionable. Like, don't forecast things you can, like, that's just depression. If you forecast things you don't have influence over, that's just depression. So instead promote agency. Figure out the 3, 4 numbers that you can forecast and act upon, full stop.
That's awesome. Good advice. Thank you so much, Stan, for doing that. I hope that was a little fun exercise for you. Hopefully, I'll tell you a little bit about your own decision-making persona. You can share that with your team.
Will do. I think they know. They will laugh at me.
So as we wrap up the conversation, I do want to ask you one final question. So if you could give one piece of advice to aspiring leaders in operations management and in software development, what would it be?
I'm probably not going to discover anything, not going to reinvent the wheel here. I really think that in business, you will very rarely have silver bullets. You very rarely have silver bullets. What you can have is you can have very strong habits and discipline on getting the basics and then empowering the magic to happen. So all the stuff from management books that is known and not that glamorous, like analyze fast, decide fast, fail fast, manage risks, in discipline. And just, if you get bored by it, then probably it's not for you. You cannot get bored by the basics. That will empower your organization to thrive. You will have those people you mentioned that perhaps are looking for that opportunity to spark somewhere and have a revolution in the world and change everything. But get those basics right. That would be one thing. And secondly, I would say, and this is something that we're really dabbling recently in, is we created this kind of line advisor that's called OrgScale AI. If you go there, you can have a chat with it. But the idea is, remember that what got you here won't get you there. And as you go through the next stage, really look for people that have been there, have went through it, and ideally have went through it several times and not just once, because that is the only way to get outside of survivorship bias. And they very rarely try to sell you a silver bullet.
Come on, no silver bullets. No silver bullets. Did you guys hear that? Stan, thank you so much. Your expertise, the very specific expertise of scaling operations and driving growth, is awesome and very much needed. So thank you for being so open and sharing that with us transparently today. Would you share with our listeners where they can learn more about you, more about MasterBorn? That would be great.
Yeah, absolutely. Come and visit masterborn.com and orgscale.ai. And feel free to follow me on LinkedIn. That's Stan Kwiatkowski, Kwiatkowski. Sorry, that's a Polish last name that nobody can spell. Feel free. I post about this stuff all the time. And love sharing and love helping out. So don't be a stranger.
Thank you so much. And to our listeners, we want to thank you for tuning in. Remember, the best decisions come from great conversations. conversations. If you've enjoyed this episode, please do subscribe it, rate it, and share it with your network. And let's keep this conversation going on social media using Dynamic Decisions Podcast. So until next time, keep questioning, keep growing, and keep leading with purpose.